Okay, let's see if that actually works on my computer here too now. But awesome. Well, here we are once again, both Instagram and Facebook, to another market update. This month, we're digging into the stats for the month of May. For those that have kind of been following our updates, you'll likely remember that we've been speaking a very similar tune all year long. And that's basically that our market's been a fair bit slower than last year. And for those of us that remember and that were present for last year wasn't all that great either. But this year we continue and have been continuing to underperform that one. There has been some hope, right, among us Calgarians, greater Calgarians, realtors alike, mortgage professionals, that what we've been experiencing was simply a delayed spring-summer market. And along with that, we'd start to see a little bit of sales uptick as kind of this delayed spring happened with the weather, that we hope that the delayed surgence of normal spring-summer activity would come as well. And then, like my market says, shake off the rust of the year. So as I've been reflecting on this month's data, I was hoping for the same thing as all of you, to start bringing some more uplifting news to you guys and gals. But unfortunately, I'm here to discuss much of the same trend as we've been on. So a couple key facts to note that I just want to hit off right off the bat. And that is, sorry, I'm just checking in with Facebook Live here to see if there's any way I can do this and comment at the same time. The likelihood is probably not that great, but I can always try. But yeah, so back to the key facts for May. Number one, May's overall sales figures as a whole, total, were 19% below last year's pace. Now, in relation to kind of historical averages, we're about 24% down from historical averages. So that's fact number one. Fact number two is the overall months of supply on the market lengthened to 4.9. So what does that mean? Why? What does this matter? Does this mean good or bad? To give you some perspective on how it was this time last year, we're actually 70% higher in months of supply. It was 2.9 at this time last year. Now we sit at 4.9. So that's 70% more properties, and the months of supply have crept up to that level. The third thing I want to hit on is, for those of you, again, watching news, watching the economics have improved in our greater area, but it hasn't been enough to outweigh the rising impact of the stricter mortgage rules that came out, as well as these raising interest rates. So unfortunately, these good news stories with economy hasn't helped yet to affect it. And these two recent changes are the things that are keeping us down. One of the first questions that I always get in relations to the market, and does these stats apply to all property types, right? And the answer is simply no, they don't. When we compare detached, attached, and apartments, there's three different stories being written. Now, this year, the stories are fairly similar, but I'm going to just hit on the key points of all three so I don't bore you to death. Number one is detached is actually having and continues to have the biggest slowdown across all three of those property types. Year over year, we're seeing May was 24%. So literally, like a quarter slower than it was last year. And year to date, we're about 21% off. So that's had the biggest slowdown. Detached has been our champion for years, but now we're seeing it have the biggest slow up. Apartment is actually having the least overall slowdown. Its year over year is only 11% off of last year. So interesting information. And then the third is the attached market. It's just falling slightly, almost right down the middle. It's at 16%, what it was last year, 16% lower. So yeah, that's what we're seeing. So despite that, I just mentioned the apartment segment having the the least slowdown from last year. Despite that, it is still the only of the three to have a year-over-year price differential that's in the negative. It's actually -3% basically year over year. And the other two are flat. So very interesting. It's simply that even though apartments are seeing the slowest of slowdowns, they were starting from a worse place. They were already starting from a position of a bit of a weakness. So the lesser of the evils isn't affecting them in a positive way yet. The other question I oftentimes get is inventory. What's out there? Is there a lot more than we've had in the past? And how is that going to affect my ability to sell or my purchasing? So for the inventory story is this. Detached is seeing a whopping 52% inventory increase over this same time last year. Year to date, the story's not as bad. Year to date, it's only 36% more than we had last year. So that's, again, obviously affecting things on the detached market. The apartment is surprising us again. It is only seeing an increase of inventory year to date of 7% over last year. So it's, again, compared to detached, basically where it was last year. And then the attached market segment, it's very similar to the detached. It's about a 30% more inventory on the market year to date than last year. So beyond the inventory and the sales information, I get often asked, is this now true across all price ranges? Because again, there's a lot of price variety in Calgary, and which price ranges are being affected, and are they being affected the same way? So I wanted to dig into this, and this is where I built a graph that could better represent this. Dave, the graph that I'm pulling up is the price ranges year over year graph. So as you look at this, for those of you watching, I know it's not huge, but what you see is what I'm trying to portray here is this is the percentage of, the total sales volume drop year over year or gain year over year based on the different property ranges. So 100 to 200, 200 to 300, and all the way up to the luxury price points. Is there parts of the market that are doing better or worse that we want to kind of key in on? And as you're seeing here, this graph looks very much the same, all the way from the far left, almost all the way to the very end. And what that is telling me that I want to point out to you is that, I just lost my page, is that across all price ranges, this is rare, we're almost painting everything with the same brush. Doesn't matter if you're 5 to 550, 6 to 650, 7 to 800. Basically, we're seeing drops in sales across all price ranges. There is a couple that are above the graph that you can see there, one standing out in a big way. That's the very high-end luxury market. There is a band of homes that is seeing between 3 and 3.5 million that are selling much more than we did last year. There's also one between 2 and 2.5 million that, again, seeing about 50% more sales year to date than last year. But other than that, you're seeing negative all across the way. The best of these markets in relation to last year is the 900 to 1.25 million range. Again, a high price range is still doing the best of those that are falling into the negative. So very interesting. So if you are in and around Calgary's average sale prices, the greater Calgary's average sale prices, you're just seeing a slowdown all across the board. And this ranges from about -15% all the way up to -36% as far as total sales volume. So that's the story across the price ranges. Yeah, so after we go price ranges, this is when I like to talk about, well, how and why does this matter for a few different people? As a buyer, how is this affecting me? As a seller, and then ultimately for those that aren't buying or selling, which is a great majority of us probably listening. On the buyer side, this is the market you want. If I was buying, I would want to be buying right now. Lots of inventory, and sellers are getting impatient. They're getting frustrated with the market. As I told you earlier, prices are stable. And as a whole, they're going to remain stable throughout the selling season. So get offers out there. See what can happen. I believe it's a great time to be buying and getting the best value and having the most options out there for you. You might be able to buy a home in December, November, January for cheaper, but you certainly won't have near the opportunity to explore the different properties and the variety of inventory. So as a buyer, I would get out there and get going and take advantage of that. Now for the sellers, this is a bit of a preach. I'm coming to you here, sellers. So I know it's easy to suggest that your realtor isn't given enough for you as the showing activity might be light. You're wondering where the offers are. But no matter who you are, whether you're top agent or the brand new agent to the market, we can't simply beat the market. Some of us have marketing initiatives that might be able to be a little bit stronger than others. And we can surely wring out the most of this market, but we can't beat it. But what you can do is ensure that you are in the market. Dave, you want to pull up that graph, the in the market graph? So what I mean by in the market, and I've mentioned this before, this simple graph about being in the market, far too many people are currently a little bit in denial about the market and the current state that we have going on here in the Calgary area. And they're pricing themselves not in the market, in the band just outside of it. It's easy to be there. That's what I call no man's land. Your choice of agent can absolutely be detrimental to your success right now during life's transition, because choosing wisely is even more important now so that we can place you in the market bubble, because we understand the dynamics of the market. So very, very important. Second to this, Dave, you want to pull up my pricing graph or my three? There we go. Yeah, second to this, when we look to price a home for the market, there is three choices. And this is what I've just pulled up quickly here for you. With the market where it's at now, the slowdown is in full effect. There is no denying this. You can't afford to play with the market. You can't afford to put dream-like aspirational pricing and hoping that something's going to happen, that something's going to stick. And as I discussed last month, all the best prices are achieved on the onset of a listing, not after sitting on the market and making subsequent price drops in time and pricing yourself up to aspirational price ranges. So for sellers, it's time to trust in the real estate professional and price your home to sell, not just to list, if your intention is to make this life transition happen. Okay, wow. I get a little fired up when I talk about this stuff, but it's honestly so true and so real. So I hope it can help you to make this next change a reality for you. Now, for those of us not buying or selling, what do we need to know about our equity position? If you're currently selling in the foreseeable future, now I might mean the next year-ish, make sure you're taking your time and getting your home positioned well. So when you do hit this clutter-filled market, that you're going to able to cut right through it, right? The more you're aware of the pace now, the more you'll get comfortable with what you're going to need to do when it comes to the market. The other thing, your prices are holding unless you're in that apartment market. So no stress there unless you're in the apartment market. If you are in that apartment market, your home's going to be worth less this time next year than it is now. So if that doesn't sit super well with you, then maybe it's time to have a chat with your real estate professional. It's likely dropping at a larger rate than the mortgage pay down you're making. So your net equity position is actually negative. So that's something, if that doesn't sit well with you, right now might be the time to have that discussion. Now, let's top into the last two segments of the day, and it's which are the best performing areas and that I can talk about. Now, I look at that in year over year price growth, right? Where we've seen some appreciation. I talked a kind of a bleak picture about sales, a not so great picture about inventory, but there are some standouts in the marketplace now on property type and locations in the city that are doing really well. The best performing areas right now, the only standouts among all 8 districts that I could find and the 3 different property types is the semi-detached market in the south, east, and northeast. These are all seeing, among all of this, year over year price growth of 5.5% all the way up to 8%. So let me say that again. If you are in or looking for semi-detached type properties, right, attached homes like this, we're seeing the south extremely well, the east and then the northeast district all performing at year over year appreciation rates that we all wish were happening across the city. So very, very unique. Hottest communities. Which ones are those? So if I were to look at hottest communities, I do this 2 ways. One in kind of the sell through, how many homes are selling per month based on the new ones coming to market. And there are some standouts there. There are some communities that are doing extremely well despite a little bit of the slowdown. McEwen Glen in the north, Somerset in the south. It's a pretty large community, a lot of volume, and it's selling fast. So get after it. Both of these have a sell-through of more than 1-to-1, as well as a month of supply around 1 month. Now, if you remember, I talked about Calgary as a whole at the beginning at 4.9. So this is literally 500 times quicker than the average. So doing really well. Another standout would be St. Andrews Heights. Now, if I were to talk specifically about just the months of supply, I would point you to Point McKay doing extremely well. Somerset's on that list. Diamond Cove, Forest Lawn, and McEwen Glen as well. Now, there's more on this list, but these were my favorites. So if you did want to know where your property sits in your community, please reach out and we can talk about that. Or you can post a comment and I'd be happy to respond. So as I wrap up the market update, I want to leave you with a few key items to think about. Number 1, the sky isn't falling. Prices are holding. It's slow, but things are still selling. And if you're looking to make that life transition, that exciting one that's coming, it's 100% possible to do so. And don't be nervous about it. Just make sure you're in full understanding about your specific market home range and type. Now, when pricing, number 2, when pricing right and when offering a great home on the market, buyers, no matter what market, will come out in a big way. We are all seeing multiple offers still, full list price offers, and over list price offers in a big way. One of our agents sold one over 100,000, just under 100,000 over list price this week. So this happens how? When sellers are realistic and the product they're offering is really strong. So for sellers, this is good news. If you position it well, you can still achieve that. For buyers, acting fast is still a possibility you need to be aware of to get that right home. So again, thank you for tuning in to our market update. I always appreciate your time and I hope it added some great value for you. Till next time, and as always, leave your comments so I can answer questions and or reach out to your favorite Redline agent to get some more information. So thanks for tuning in and we'll talk to you guys very soon.